So Paul Sweeny, take us through the offer. You've had an opportunity to really pore over it.
Yeah, this is really, I think, a very aggressive response by Disney. We thought they might try to match the Comcast offer and kind of rest back on the fact that it's a stock offer. But no, they came over the top with a premium offer to the Comcast all-cash offer. You know, and this kind of really shows that I think while both companies clearly need and want the 21st Century Fox assets, you know, as we've said before, we believe that for Disney, they want it just a little bit more. It's a little bit more critical to their long-term future as the Walt Disney Company tries to, you know, change the way they do business a little bit in terms of their television business and rely less upon the traditional pay TV bundle and go direct to consumer, much like Netflix does.
So what happens next, Paul? I mean, does Brian Roberts and Comcast come in and say, okay, we'll offer 38 or more in cash?
Yeah, we've been saying all along that this could, in fact, very well be an old-fashioned bidding war here, and I think we have probably not heard the last from Comcast. But if Comcast is likely going to have to restructure their bid and to include some stock, because right now at $35 a share, it was going to push their leverage over 4 times debt to cash flow. That's higher than they typically like to be. That's higher than their shareholders like to be, and I think the rating agencies also are concerned about that leverage. So to the extent they need to get into a bidding war, my sense is they may need to introduce some stock into their transaction. That is something that the company has been reluctant to do because their stock has really been underperforming. It's down about 20% year to date, and they have stated that they don't want to use their stock because they think it's too cheap at this point.
Well, exactly. I mean, it's not just stock for stock and cash for cash. Cash is cash, but stock is different. And there's a general perception, I think, on the part of the Murdochs and certainly on the marketplace, that the Disney stock may be more likely to appreciate over time right now than Comcast.
Yeah, I think Rupert Murdoch, you know, I think he's kind of suggested here pretty strongly when that first Disney bid came in that he was very happy to own stock in the combined Disney-Fox for 2 reasons. One is I think he thinks it's a better long-term collection of assets and a better long-term investment. And number 2, the stock deal provides, you know, a tax benefit to sellers, including his family. So I think he strongly prefers the Disney bid, but the Disney bid has to be credible and competitive vis-a-vis the Comcast bid, and $38 a share today is certainly credible.
So finally, Paul, it's no coincidence I think the offer came in today. 21st Century Fox board is meeting right here in New York City to evaluate the Comcast bid. What do we expect out of that meeting now?
Well, I think, you know, initially before this Disney news, the expectation was that the Fox board would absolutely entertain the Comcast bid and, you know, really put the pressure on Disney to react. Disney, again, has kind of preempted that whole process here. So, you know, the question will be, I think, for the board, which bid do you like that are on the table today? $35 a share cash from Comcast or $38 in stock from Disney? I think clearly the board will support, once again, the Disney bid.